Most income investors think they're building freedom, but what if your portfolio is quietly deciding your retirement date for you? This month, we're breaking down exactly what my income portfolio produced. Real cash flow, real growth, real numbers, no projections, not theory. Did the income grow? Did the NAV hold up? And am I actually on track for financial freedom within the next few years? Let's open the books, so stay tuned. Welcome back to Simply Money. This is our monthly update where we look at our income portion of our portfolio and see how each of the funds has done and what's our total income been for the month. So we're looking at a recap of February. For those that are new to the channel, thank you for joining us. Welcome to Simply Money. For those returning, we welcome you back, and I thank you for all your support and for all the comments that you provide. It helps provide more videos for others, and I appreciate that support. What we're doing here is we're looking at the portion of our portfolio that is income focused, and we do this once a month, and we give updates of each of the individual funds. I'm going to start right off here with SCHD. For those that are aware of this, SCHD is a quarterly paying fund. So in February, there was no distribution, but I did want to point this out this month in particular just to show how a lot of people have been really down on SCHD over the last couple of years because it's been relatively flat. If you look at 2022, when the market was down, the good thing with SCHD was it was down, but not very much. So it really did provide a defensive portion to our portfolio. And then for 23, 24, 25, it's been pretty flat and there hasn't been a lot of movement, but we've been getting those consistent dividends and dividend growth. And now we're seeing the portfolio actually take off a little bit. It's been really strong in 2026. It's up about 14%. But I wanted to show you, for those that have followed the channel, you've seen this, where you see back in 2017 where we bought into this, about $200,000, and we just let it ride. This has been adjusted for the split that took place. And it's just been a steady climbing, growing ETF as far as the share price and the dividend. We did sell some, and this was more for just rebalancing our portfolio. It wasn't because we were disappointed with it. Yeah, hindsight, I wish maybe I waited a couple months to sell. That happens. I sold in September and a little bit in October to get the portfolio where we wanted it balanced. But you can see that $200,000 had grown at the end of December when we did our update. It got up to $322, but because the share price has shot up from $27.35, now sitting at $31.77. Our portfolio balance has shot up to $374,000. And what I show over here, this is just for me. I don't know if it's going to make me happy or sad, but this is just reality, and this is part of the whole process, and I'm not really upset about it at all. It's just nice to see that. This is the amount here that we sold out, that we cashed out, and we reinvested into other areas. And if we hadn't done that, this is just showing the extra amount that would be in here. So if you add this 191 to this 374, that's what just the SCHD portion of this portfolio would be. But currently it's sitting at 374, which is good. I'm very happy with that. I'm fine with that. And I don't want this to be too heavy, so I had to sell out. It just happened I sold out back here, still at a gain from when I bought into it. So I'm not concerned about that. So that's SCHD. Next month, we'll be giving the update as we get the March distribution. Don't forget, SCHD has its reconstitution at the end of March, so we'll be looking at that as well. I'll be doing a special video here shortly just showing the performance of the past year of the underlying funds, as well as maybe some projections on what we think will be some of the funds that are moved and added in that. Anyways, that's SCHD. Let's move on to WPAY. This is one of our, maybe I'd call it disappointing ones that we had got into early, just checking it out. You can see we're dollar cost averaging in here. Looking at February, here's where I stopped buying more. I stopped the drip, and I'm taking the distributions and I'm funneling them, reallocating them to other funds. But at the end of this time frame, you can see we're still getting about $70, and we'll go over that here in a minute, how much each of the funds paid. But we're down a little bit on this, but it's not taking in consideration these last couple payments that have gone to other funds. So we're at the zero drip portion now. So this is just going to ride these 298 shares, and we're going to go from there. That is what we've done with WPAY. And we're going to look at what each fund paid in another sheet here in a minute. Don't tune out yet. At the end, I go over what each fund paid and the total income for the month. I just like giving these updates of each individual fund. So CHPY here we have has been a really strong performer in this time frame from September. We bought 175 shares. We bought a few more throughout in December, and in January bought a few more. The price had peaked up here at about $61.50. February's been a little rough. It's been some down here and there, but nothing drastic. It's down to $59.48, which is still up from where we bought in at $55. So very happy with that and paying steady distributions. You can see the last few months, it's been 52, 53, 48, 53, 53 cents, just very consistent. And right now we're currently up about $4,000 on that. It's been a nice producer for us, nice income generation there. That's a weekly paying one. Let's jump over here to one of the monthly ones, IWMI. We're up about $700, about 10% on that. It's paying a nice steady income on a monthly level. The share price has stayed fairly consistent. It's gone up a little bit. Again, it dropped slightly in February, but in January and early February, it had peaked up here. We'll keep monitoring that, but I'm very happy with IWMI and its small caps, Russell 2000, small cap covered calls. So there's a lot of nice stuff that you'll see with this. So moving over to YBTC, those who are following crypto at all, you know crypto's being hit right now. It's in another one of its pullbacks. I'm not concerned about it. It's a small position, and we're just going to let these funds ride. We're not reinvesting any, but we are going to just watch these shares that we have here. And as crypto makes its recovery, we'll look at seeing how that recovers with that. But that's the position we're in with that. It's producing some weekly income for us, and we're just putting those in other locations at this time. Same with blocks, another crypto fund that we're seeing get hit pretty hard right now. And we're taking those distributions as well and putting those into other funds. Mostly I'm putting them into my growth funds currently. I am putting some into QQQI and SPYI as well, building those up. Along with, I'm going to add some portions of GPIQ, GPIX, just different approaches to some of the same underlying funds. I'll keep the percentages about the same with my GPIQ and some of those funds. I don't show all of those newer funds that I have going on. Those are just getting started. I'll add those into the sheets down the road, but currently they're just getting built up. But most of this is being funneled into growth as I've got my income where I want it and going to continue to build that slowly, but also adding to my growth funds for the time. And then I will switch that over when it comes time to need that money. Brings us to QQQI. Same thing here. We've seen this grow very nicely. Share prices pretty flat over this time frame that we have it since July. It's gone up and down, but it's pretty consistent. It's flat. But the dividends, the distributions have been very consistent as well. They're down 3 cents. They've gone from 64 cents to 61 cents. That's the range that you're looking at. So very consistent, been a nice monthly paying distribution on that. Likewise with SPYI, we have the same thing with the distributions going from 51 cents up to 53 cents. And it's been anything in between for those. As you can see, we're making some other buys along the way with some of those funds that we're getting. We're doing very well with both of those, generating some monthly income for us. Now, this brings us to ULTY, the experiment. Those who have followed the channel, you've seen some of the videos we've done on this experiment. This is strictly a Simply Money experiment. I do not recommend doing this, but we did this for the channel. We did this for the viewers, and I'm going to show you the update. This one here, you can see back in July, we bought into it. We added some positions in August, and obviously it's been through the ringer. It's been up and down. It went from a monthly payer to a weekly payer. It changed some of its underlying funds. It's done a lot of shifting, and they're trying to get their balance with this. Not sure if they've done it yet or not. Time will tell. And we saw a lot of decline in the share price, a lot of decline in the distribution amount. As we come down here, looking at the last so far for 2026, we've seen the distribution from 48 cents up to 51 cents. And so pretty much right in that range. And you can see the share price has gone from 37 down to 35, down to 34. Right now it's sitting at 35.08. So our current balance as of today is 19,561, just slightly above where it was when we got this last distribution. We were down overall. We're fully dripping this. So again, this has not been a great fund overall at this point, but we're going to continue to see what happens. I'm not at the point yet where I'm giving up on this experiment. I'm not at the point yet where I'm going to take this and take the distributions elsewhere. I think I'm getting close to doing that, but we're just going to ride this experiment and continue to monitor it long term to see how it does, see if they recover, and see if maybe we wish we'd got out of it sooner. Maybe we wish we had bought more of it when it was trending down. We'll just have to watch and see. So that brings us to this portion. This is the full portfolio of the income portion. So we have our symbol here, what fund we have, the number of shares we have. This is the current price as of today, which is the 1st of March. And then we have what the annual dividend would be. And some of these are tricky. Some of them, like SCHD, is growing. So we have to factor in what's the average growth rate we're going to use for the next 12 months. You have others that are declining. So we have to take the trend analysis of the last 12 months and then trend that for the future 12 months on the same decline average. And that's kind of what I do. So if it's declined 10% over this past 12 months, I forecast, okay, what will the average be over the next 12 months with a 10% decline? It's not an exact science. We don't know. It could increase. It could decline even further. That's just how we project that. This is showing our projected annual income and monthly income. This is the total balance of the portfolio. Those who have been watching this, you can see that that's been trending up. When we started doing this a few months ago, we're doing the 525, which we still use as the number on our all-in scenario videos that we do because we're trying to keep it consistent with the same number. So when you look at one fund versus another, you're able to kind of get a better feel. I know percentages are always going to be the same, whatever amount you use, but sometimes it's easier just seeing the dollar amount. Okay, it increased from X number of dollars, 525,000, up to whatever or down to whatever. And so keeping that the same, we haven't adjusted that to what our income portfolio is currently. We're just going to continue to do that. Maybe we'll make, when we do the updated series of all these funds, we'll update it with the newer amount that we have and see how that works. Or maybe we'll go to a lower portion, like a $50,000 investment. So we'll keep monitoring that. Well, that is the growth of each fund and what's happened, where it's at. Just a quick overview. Now I want to take you to our monthly distributions. And this is the fun part for me. Now I'm not taking this. This is all being reinvested, whether back into the same fund or I'm reallocating it to other funds. But this is the fun part. I was telling my wife the other day, it's getting passive income is the greatest feeling. Making money while you sleep and finding different streams. I have our distributions that are making money. I don't have to do anything. I've already done the work. We've already invested. Now it's just making money for us, and we get these notifications. Distribution. So my phone dings and it says, $39.42 distribution. And on the 4th, it did it again, $100. Notification on the 5th. So I got 3 notifications, $240, $81, $240. So I'm getting these notifications that, hey, you're making money while you're sleeping, while you're golfing, while you're hiking. All these notifications are coming in. And so that is one stream of passive income. My favorite is distributions, dividends. I have other passive income that comes in and other income that's not so passive. YouTube is not a passive income. I have to continually create and do things. Now, there's older videos that still make some passive income, as those videos maybe resurge or they're just trickling a few dollars here and there, but that's a semi-passive income. And then those who have seen me, I do my Google Sheets. I provide those. I update them. It requires initial investment, but then those continue to provide income. So I get notification, hey, you made $10 here, you made $10 there. So these different streams of income is really important when you're looking at retiring, in my opinion, especially if you're looking to retire early. Try to find ways to create passive income. And what we're looking at here is our distributions, this passive income. For this week, there was $700 of passive income. The second week, $675. And this third week, because we get our monthly payers like QQQI, SPYI, IWMI, we got $2,164 passive income. And then we got a $656. So for the month, and February was a short month and there was no SCHD. So this is a lower amount than we average, but it's going up. And we'll look at that in a second. Our trend from when we've been tracking this has been trending up, and we like that. So right now, for February, we received $4,200 of passive income and distributions that I have reinvested into more funds to continue to create that upward trajectory of growing my passive income. You can see each of the funds each week when it paid. You can see for the month, the total, our highest payers were CHPY and ULTY at $950 and $980. And then we have some of our more, what I'd call a little more steady, our QQQI, our SPYI. Those are providing once a month. But these are, to me, some really nice incomes that we're getting, and that is on a short month. And so as we look at our trajectory, we have all of 2025 we can look at. And those who have followed the channel, you know that back here is when I was all in mostly SCHD, and I had a few other funds. Coming January, February, there's hardly any income coming in. And that's why you saw that selling of SCHD as I'm shifting to prepare for utilizing this. I'm doing it slowly. I didn't want to wait until, okay, now I need it. Let's shift everything into one lump sum transfer. We're slowly preparing ourselves for the use of this. And like I said, we're at a point where we can, if we wanted to, retire. We're not ready to yet, and that's a personal preference, personal reasons. But financially, we're at that place, and we have the income being generated that more than covers our needs between this and other passive income, and then knowing what we have coming in for Social Security down the road, different things. But this is just helping us prepare for that and get ready and build it up even more. So you can see these off quarterly months were very low. You'd get your SCHD payment, so March, June, you can see how those were much higher. But as you see in July and August, we began making this slow shift. And you can see that $3,000 in August, but we continued shifting. Our first month with that shift and with SCHD, you can see how that jumped from $5,000 to $5,400 up to $6,100. But this is what I like is these off months. Now, October had a lot of those paid 5 times because it was a 5-week month. And so there were some bigger funds like ULTY that paid more, and we got an extra payment out of this. That's why that's so much higher. Then November was down a little bit from that, but if you look at it compared to August, it's still up. And then look at what we had in December with all of those funds and SCHD. We had a really good month of $7,600. Now, January was more back into the regular trend, but look at that, a non-quarterly payment, no SCHD in there, was $5,200. That is almost as high as we were getting before we made the switch with SCHD. And then February, because there's a short month, a lot of the funds didn't pay but 4 times. There was no 5 payers, and there was no SCHD, and the market was down slightly, so some of the distributions were slightly down. But again, our average is going up, and that's this red line. You can see the trend, and it is growing very nicely. Here's what we have for January. We had 5204. For February, we had 4199. Last year, now again, remember last year had these slower months with no SCHD paying in these months, and we weren't transferred into the income portion like we are now. So for the year, it distributed $40,000. So far, January and February, we've already got $9,400. We're projected, based on what we showed over here, around $70,000 for the year. We'll see if that holds up. It may be lower, it may be higher. I'm thinking it's going to be slightly lower, but that's okay. We're still trending up. I know we'll be above this 40,000. And so we'll see. This year's a big telling year. As we get to the end of the year, we're going to be very curious where this ends, and then we'll go from there. But that is the update. You can see, stay tuned for next month's March update to see where we come in with SCHD paying as well as all these other funds, and see, will we break our record or will we be slightly below that? What are your predictions? Leave them down below. Do you think March we're going to make more than we made in December or less? And why do you think that? Leave them comments. I'm excited to see what you guys have to say. If there's something you want to see on these videos, let me know. Leave comments down below. I appreciate all your support, and we'll see you next time on Simply Money.